trading morning. Right now it's 9:16 a.m. It is January 19th, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Our focus here is trading the S&P 500 E-mini futures contract. Learning how to trade it, learning how to trade it better if you're already trading. This is for experienced traders and new traders. New traders get set off on the right foot on the trail to develop consistent profitability. And traders that have been trading for a while, doesn't matter what instrument, based on electronic trading, you can switch over to the S&P 500 E-mini pretty quickly. If you need a trading platform, let us know, and we will give you information about getting yourself set up for trading with a broker. You can talk to that broker about your commissions, obviously, your fees. You should start out in any endeavor practicing, and in this case, practicing based on a trading strategy, a trading methodology, which is price action trading. That's what we do here on a daily basis. We look to do 2, 3, 4, 5 trades. We'll look to do that this morning based on price movement and price activity. Price movement and price activity. One of the features, trading advantages over other traders that Sal Shaul uses. Now I'll introduce you to Sal Shaul. Sal is a 25-year plus trading veteran. He has a price action trading strategy that he has developed over those 25 years or so. He is currently actively trading, utilizing his price action trading strategy, his price action trading methodology. So that's what we do here on a daily basis. So the opportunity for you is to focus on a price action trading strategy that has a series of levels involved that are your areas or areas that Saul believes for his own trading, the market will make change and he can capitalize on that change based on price action entries, exits, and stops. Price action entries, exits, and stops. So there's a formula here for you to start to work with so that you can develop or look to develop consistent profitability based on your trading. And listen, we know that trading is what? It's pretty easy to put trades on, to set up charts, to use order entry. It's pretty easy. The concept of being a consistently profitable trader for your trading business is rather elusive. So what we look to do here is help you bridge the gap between being what would you call it? A regular trader that just loses money at the end of the day or at the end of the week and really doesn't have to show much for yourselves on your own trading platform as a business or even as a serious hobby. So what's different here? Well, the difference, number one, is Saul, because when you ask him a question, you're going to get an answer because he is at risk based on his trading methodology. He's also trading that methodology. So when you ask him a question, he has an answer based on the actual trade, the risk around the trade, the emotion around a trade, Hi, Maureen. Welcome back. The emotion around a trade, right? And that is really important. Number one. Number two, Saul starts his trading day off by setting key proprietary scalping levels. These levels are his roadmap for consistent profitability today for his own trading. It can be your roadmap based on this service and being part of it um, on a daily basis or when you can attend. So, what Saul's going to do today for his own trading, and this is a TikTok for you, is that he's going to come to his screens right around the cash open. Right now, it is 9:21 a.m. Eastern Time. It is January 19th, 2021. And again, everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. So he's going to come into the open. Right now it's 9:22, 8 minutes or so. He's going to set his levels and he's going to give them out to everybody in audio. Think about that for a second. He's going to give you his proprietary scalping levels out in audio so that you can write them down. So that's trading advantage to you, number two. You're going to have Saul to ask questions to about scalping this morning's market. You're going to have his proprietary scalping levels as a roadmap, areas today where Saul believes the market's going to give him a better chance to make money at based on price movement and activity in and around those levels. I mean, that's really important for making money today is having a roadmap so you don't have to think. You don't have to just react after the cash market opens. You don't have to try to catch up to what your software is doing based on all the bells and whistles that you have. Advantage number three, Saul's charts. Saul has very minimal charts, minimally visibly. Okay. They're really placeholders for his levels so that he knows that he's focused on where the rubber meets the road, where the money is at the price action in and around his already pre mapped out levels. So let's talk about how the levels are given to you. Well, they're given to you right around the cash open. They're given to you from Sol audibly. You write them down. It starts out with what he calls, based on his pricing or his prices, a pivot is his first level. Then he's got prices on top and bottom, support and resistance, which he's labeled them as specific areas, prices where he believes the market's going to make change. If it's not coming back to his pivot, it may be price action in and around his other levels. Now, that's really it. Is where do you have a better opportunity to make money based on areas in the S&P 500 E-mini? Now, as a guest, put up an S&P 500 E-mini chart. As a guest, put the two time frames up for the S&P 500 E-mini in your chart, a 5 minute and an hour. If you have the opportunity to have the data on the 30-year bond, put it up. Put up charts that are similar to Sol's. When he gives you the levels, load them into your software. Write them down on your trading pad. Learn to load them into your software the proper way so that you are keyed up and ready for the trade action in and around Sol's levels. If you can just do that today and start to focus, actually, I should say, if you can start to focus today on these elements and you start to think about them based on your trading day, if you can do one, two, three trades today, if you could do one trade well where you bank money, like if you could make $100 today based on Sol's trading methodology, then you're way ahead of the game for yourself and your trading business. Now, how to get there is coming in on a daily basis, asking questions, receiving Sol's levels when he gives them out in audio, writing them down on a daily basis. Observe what happens at those levels and take note of it. Listen to Sol's commentary as he relates to his levels and what the true market condition is doing today, how his levels are behaving, how the market is behaving, what's the momentum and follow through in and around his levels. Are the levels valid the second time to it? Are they not? How were the levels when the market came to it the first time? So there is a focus in and around the ability to profit today based on Sol's methodology that you really probably haven't experienced before. The reason I'm saying that is that Sol's levels are pretty darn good compared to standardized levels. You can get levels for anybody. You get calculated levels, you can get standardized levels from your software, you can make up your own levels. Generally, those levels are a traffic jam with a lot of crazy people out there trying to, or thoughtful people, right? Trying to make a buck trading, and they're all banging in and around these spoon fed levels from standardized software. So you can imagine what's going on where people may have the right idea, but they get stopped out and they lose money. We're hoping that that doesn't happen here. Happen to you, happen to anybody. So that's the concept here. That's the reason why you would stay. That's the reason why you'd want to get, well, I'll send it out to you.
All right. Good morning, everyone. Can everybody hear me all right? All right. Welcome back, Maureen. All right, let's give you our levels here for this morning. Our pivot this morning is 37.89. 37.89. It is the January 19th. Amazing. Amazing how quickly time goes by. Anyway, so 37.89 is our pivot. Support down below at 82, 74, 66, 59, 52. Resistance on the upside at 96, 38.05, 13, 18, and 25. Pivot 37.89, resistance on the upside at 96, 38.05, 13, 18, and 25. Support below at 82, 74, 66, 59, and 52. The market here, a little happy. Nothing crazy happened over the weekend. And I guess looking forward to new policies that's going to come in as far as getting some stimulus passed, bigger stimulus passed. I think, again, that is keeping the market, has been keeping the market strong over the last 2-3 months and pushing up here against the highs. And so everything is, kind of where it's supposed to be, I guess. Yeah. So that's where we're at. We shall see what's going to happen. We don't have any preconceived notion as to what's going to happen when the market opens. We just trade in front of us, try to use price action to dictate what our trades are going to be, what our next opportunities are going to be. We don't think markets go straight up or straight down, so we think we find these inflection points that the market will bounce off to give us an opportunity to scalp the market. So those are the opportunities here. What we do or show you, or what I say when I'm talking, is definitely taught experience, and we kind of point out some of the things that you should be looking for, recognition of the trades, and then we kind of work with you on how to implement them and what to look forward and how to maximize profits. Does the ES follow the Dow? Uh, most of the time, I'd say 90% of the time it does. But it doesn't all the time, and the levels are a little bit different. I would say a lot of times they do, but you have to remember sometimes they do get out of whack. As you have to remember, the Dow is a Dow number, that everybody sees, and the S&Ps or the ES is the 500 stocks that are out there. So yeah, for the most part, it does. 90% of the time, probably. It does get out of whack every now and then. So, if you want to try to trade the Dow instead of the ES, it's the levels are kind of, I don't know if they'll be the same. No, they do follow each other to some extent. So that answers your question. But again, there's always a time where they do get out of whack. So, all right. So it's Monday here. I think the market, like I said, kind of a little bit happy. Nothing crazy happened over the weekend. Can the Dow be used for the direction to the ES? Probably. I would say that the ES the Dow follows the ES, if anything. I don't think the Dow would give you direction. I would say lesser chance of that happening than the other way around. But that's my own opinion. I don't have any, data to back it up. I have traded both, and that's why I can tell you that they do get out of whack once in a while, and for the most part, they do follow each other. But to say that one follows the other, I don't think that'll be. If anything, the ES follows. The ES is the leader, but no empirical data to give you a positive answer. But just from what I've done. All right. Again, we welcome questions. You put them in the chat box area. That's where I can see the questions quicker because I have that window up. The chat box area is also going to be where we're going to print the levels one more time for us, at least for the time being. And you'll be able to see the levels in the chat box area if you bring that up. And that way everybody can use them to just as a written visual instead of just me verbally telling you out loud. So the market kind of drifts down here a little bit, support down at the 82 area. All right. Again, if anybody has any questions, please feel free to ask. We like questions. Gives me an idea if you understand what I'm talking about, or maybe I have to make something a little bit more clear in describing something. So questions are good. Yellen is testifying today. She's going to be the new Treasury Secretary. So she's going to be testifying and focus on spending, with a few questions geared towards timing of taxes to pay for this. Expectations are for the administration to push that discussion for a later date. All right, we went down to our green band there, if you're a green band player, and bounced up a little bit. If you did, you would probably have to take both, because she's going to be in front of a Senate confirmation hearing this morning. So she's going in front of the Senate confirmation hearing. That's why she's going to be in front of Congress. So I guess now she's, every time she talks in front of Congress, she's or every time she talks now, she's going to be, just like Munchin was important when he spoke. I don't. What is the in front of support number? Oh, okay. 30. Yes, 37 handle. Right. So 37 handle is the handle is 37, and the levels are underneath. Yes, that'd be correct. And then 38 above 3805 is the first level on the upside. So. All right, so she's going to be talking today, and this is her confirmation hearing. I guess she got confirmed to be head of the Fed, so I don't think there's going to be too many surprises. The only question she's going to be getting that are different than before is she's going to be leading the administration in those kind of financial decisions instead of the country on financial decisions. So. All right, so we'll see what happens. We kind of drifting down just here a little bit, teasing us around this green band that's holding a little bit. Again, for first support level I have is down at the 82 area. Our blue band and our hourly comes there at 80. A green band and our hourly comes in 84 too. So just as a you gotta, again, when things match up, we try to have different concepts and ideas of why you should be trading. And when those concepts and ideas line up, we like that level. The green band is just an average. Blue band is a Bollinger Band. And we found a way to incorporate those two concepts into our trading. How to use them, when to use them, when not to, stuff like that. All right, so we did went and touched our green band there again. We have a couple of them lined up together. It's been a while since both of those two lined up, but it's been a while since we've been down here. All right, so yeah, you can use any kind of chart. The question is how much you want to trade. If you have a lot of opportunity, if you want a lot of opportunities to trade, then you trade the 1 or 3 minute. Gets a little bit hectic. We try to minimize our number of contracts that we're trading to about as low, given what market conditions are, but we try not to over trade is what I'm trying to say. Consequently, we don't like, we pick our spots. The 5 minute gives us a good opportunity there based on not over trading. If people have different deals with their brokerage houses, if it's cheaper for you to trade or if it's not so expensive, then you can trade a little bit more. But we try to stick with the 5 minute chart instead of the 1 and 3 minute. But you can use the 1 and 3 minute for a backup. if that's what you desire. And also, I don't like to have too many charts up there. We try to keep things very simple here. You can get a lot of information from different points of view, and then it'll cloud um, your right decision making. I think because one chart will tell you one thing, another one will tell you another thing, and then you miss the opportunity. So we try to keep it very simple. But I know a couple of our traders, uh, they use the other charts. You can use a 10-minute, 15-minute, whatever you want, depending on how you trade. And everybody's a little bit different. And, everybody's got different risk tolerances. And again, we try to work with each individual to maximize your profits based on how much your risk tolerances are. All right, the market slowly dripping down here a little bit. Our support level down here at the 82. Just trying to get down there, but just kind of tiptoeing its way. See what it wants to do. I don't know if you can get in short anywhere. Did it off the morning? Give it a quick pop up. I don't know because I don't use the 3-minute. I don't use the 1 minute, so I can't tell you if the 3 and the 5 minute say the same thing. Would it be a good trade? I can't. I don't know. I've never. Like I said, I don't have the other ones up there. So maybe not. I don't know. Maybe that's if some of our traders want to use both to confirm the trade. Hey, that's all right too, and no problem with that. Again, you have to do what's comfortable for you. I'm not here to change anybody's trading concept or a perception of what the market is doing or how you're trading, especially if you've been trading for a while. I'm just trying to add more information to your array of what to look for, and hopefully take some of my information, use it with your own, and if it matches up and you feel comfortable in trading, the key here is to make sure you get confidence in entering your trade. You see the setup, and you put your trade on because you recognize the setup, and you've used it before. You get confident in it, and you can use it and employ it to try to make money on that trade. So, and everybody's got different risk tolerances. Like I said, what you is good for you might not be good for somebody else, vice versa. And I respect that. Like I said, I've been trading a long time. I've been trading in the pit, and I could never do what some other traders were doing. When I knew what they were doing, I could never do what they did. And probably a lot of people looked at me and said, "Well, I can't do what he does." It's all right. You do what you're comfortable doing. All right. So Yellen going to be in front of, I guess, the confirmation hearing. Like I said, I don't think it's going to be a problem for any one of his candidates. All right. Again, we are slowly coming down there, coming down to 80. Well, we got a little support here at 82. Let's see if there's any numbers coming out this morning that would interfere. Nope, nothing as far as any fundamental news is concerned. President-elect Joe Biden's pick for Treasury Secretary, Janet Yellen, is set to testify today before the Senate Finance Committee, which is considering her nomination as a key member of the cabinet. She's set to call for big action on COVID-19 pandemic after Biden unveils his $1.9 trillion economic stimulus plan last week. Yellen served as a top White House economist in the 1990s and Fed chairwoman from 20 in the 2010s. Meaning a confirmation would make her the first person to achieve such a trifecta of economic leadership role. Economists don't always agree, but I think there is a consensus now. Without further action, we risk a longer, more painful recession, a long-term scarring on the economy later. Over the next few months, we are going to need more aid to distribute the vaccine, to reopen schools, to help states states keep firefighters and teachers on the job. Yellen will say in her testimony, neither the president-elect nor I propose a relief package without an appreciation for the country's debt burden. But for now, interest rates are historical lows, and the smartest thing we can do is to act big. That's coming from her prepared remarks as the market comes down here to our 82 level, maybe. Again, we scale into our opportunities here, and it doesn't have to hit the 82 perfectly for us to make a little bit of money on it. Everybody scales in a little bit differently. Some scale in a point above and below, some scale in a half a point above and below, some don't scale in at all. So it all depends on your individual risk tolerance and how you want to deal with it. As we quickly come down here to our 82 area, see what it wants to do. And a nice little quick pop up right up to 84. Again, we're looking for about 2 points on our trades. And I've said this last week, you almost have to have your how quickly the markets are moving around almost implores you to have your orders kind of in the slot there. Otherwise, you don't get you get one chance and then it rotates back. The volatility is still in the market. And welcome to some of the new folks that are here. We are trading mini S&Ps, which are stock equity futures. We're trying to take advantage of ebbs and flows of the market using our levels plus price action opportunities once the market paints some bars. So we used both ideas and put together a methodology that allows us to take advantage of those opportunities. All right, we touched 84 and then come back down here. Again, gotta be, like I said, quick a little bit with your market's getting a little bit slippery. Hopefully you're able to get out of some up there as we continue to downtick here. And next level on the downside we have is the 74 area. We're looking for 2 to 3 point opportunities depending on the way the market plays itself out around the level. Sometimes it's a little bit easier to take a little bit more than 2 or 3 points on the trades. Again, all dependent on how much risk you are willing to take and how you enter your trades, how you scale in, how you scale out. All these are factors that we have to consider when you are trading. And the most important thing, obviously, is your risk tolerance as to how you're going to manage those trades. Sometimes it's a little bit easier. Sometimes it's not. Sometimes the market's gets a little bit more buoyant. So you have to act a little bit quicker. Sometimes it's nice and slow and everything's quiet. And, but then you have to adapt to market conditions. That's what trading is all about. Again, we had a quick rotation up to 84 off of our 82, and again, market come back down here a little bit. Hit some sell orders. I don't know. Could I have told you to sell it anywhere? I don't know. It's tight, tough little call there. We kind of let the market kind of give us indicators as to how we enter our trades, when we get in, when we get out. So we're looking for the market to help us there. Sometimes it gives us clearer indication, sometimes not. But that's what trading's all about. All right, so we kind of drifted down here, probably out of any 82s if you had them. If you maybe bought the blue band in our hourly there around the 80, maybe you're a little bit long here too. I don't know if you bought both. If you did, again, everybody's a little bit different, and market, we kind of let the market kind of dictate what our levels are, in addition to where our exit strategies are going to be. So sometimes you have to take a little bit more risk on the trade based on uh, other opportunities that are intertwined, within the level. So there's always a level, and there's a backup, and so on and so forth. So again, we are suggesting opportunities and trades and how we do it. And a lot of new people here, so please feel free to ask any questions. If you have the chat box area, I'm going to put in the levels in the chat box area there. Those are the levels that we gave out this morning. And we drifted down here to our support here at 82, and then kind of went through that. And now we're looking at the next level on the downside we have is 74. We try to use those levels as kind of guides as to where our trades are going to be. We are trading mini S&Ps, like I said, looking for opportunities to scalp the market, 2 to 3 point trades. Again, you can take, we minimize, we want at least 2 to 3 points on our trades. Sometimes we get a little bit more, sometimes we get a little bit less. It all depends on how you get into them and not. We could do definitely recommend if that's what you're interested in. Brad, who's the other person here, will definitely be able to help you with those details if you want to go beyond that, and if this interests you and what we do. Again, anything we talk about here is based on a taught experience. How do I establish the resistance and support? Those are the things that we teach, and we try to let the market kind of dictate where our resistance and support levels come from. So I don't make things up. I don't have I don't have like a preset model that gives me them, or some people like to use to establish your pivots. Some people have an equation, take the high and the low, divided by 3 or something like that, and you come up with a number. We are all based on what the market is dictating for us. So all our levels or anything that I say is based on price action, and that's what we try to teach. Yellen's approach to financial regulation and protecting the economy against this systemic risk is also likely to differ from her predecessors. 2 years ago, Yellen co-signed a letter urging Treasury Secretary Mnuchin not to move forward with plans to relax oversight on big financial firms. And last year, she called on the new Dodd-Frank. Along with the Biden administration, Yellen has emphasized the need to create equitable growth and could use the tools of the Treasury Department to combat climate change, rebuild regulatory institutions like the Financial Stability Oversight Council. My principle based on, so no, I don't, no, my principles is based on my years of trading. I guess I could write a book. But no, I don't. And if they do, based on somebody else's work, it was coincidental because I don't read too much. Sorry to say, but most of the work that I've done, as far as the work we share with everybody, is based on my own trading. It's the second time that somebody might have suggested that I should write a book. You didn't suggest that I should write a book, but I get it. That's what I inferred. All right, Steve T, you're welcome. Yeah, so no, I can't say that it's based on any, but if it does, like I said, it's totally coincidental. So, all right, again, the market getting a little bit slippery here. We're drifting down here to the 74 area. Again, we're scalping the market, trying to take advantage of ebbs and flows. Sometimes it's very easy, sometimes it's very hard, sometimes we have to work an order, sometimes it's we don't. Again, this is what trading is all about. We we settle in and let the market kind of tell us how we're going to trade, how much risk we're going to need. I wish I could tell you beforehand what's going to happen, but that's doesn't always work that way. I see, guys already told me what I could name the title of my book would be A Day at the Beach. That's very good there, Don. That is very good. The support and resistance numbers, if you look at the chat box area, somebody will print them up for us or distribute them in the chat box area in a second, maybe. Yes, no. Nobody commented on that. There they are, and there's the levels. Nobody commented on that title of that book. That was very good there, Don. I like that. The inside joke. All right, ain't that a shame? We got down to down to 75. Yeah. Person was trying to tell me what wind chill is when he lives in California and the weather's like 80 and sunny. Yeah, okay. Nice try. All right, so we went down to 875 and change there, and then sprung back up. That's a shame because we were looking at 74 area, and coming back up here. The resistance right now would be around the 84 area. So they were just joking, right? That little break was just joking. That's what this market does all the time. You go in one way and then they reverse because everybody gets a little, and there could be news too. And look, she is talking in front of, the committee, so she could say something, right, that could affect us. You got to keep that in mind because there is a Q&A section that comes after her prepared remarks. And if she clarifies something that surprises the market, they could have some effect in how the market reacts to it. since that is obviously what she says and how she handles policy is going to affect the market. So not only was she a Fed chief, she's also now head of Treasury. So it's going to be you got to just watch what she says in a different sphere, but still very important. So if she does, if they do go through a Q&A section, that's probably what's going to happen there, and we're going to get some effect off of what she says. Market again, we have 84, and it got right up to 83 and a quarter there, and then came off. That's a little shameful. Just missing it by just that much, right? So again, the 84 was Maureen. Just ask a question. You don't have to raise your hand, for heaven's sakes. Oh, good morning there, Peter. How are you? Good. As far as our next class is concerned, we'll probably try to do tomorrow around noon. I think it's Chad. Are you in the room too? All right, so be a little bit careful here in this rotation back here to the 80, the 74 area, just because we didn't like to get it just a little bit ago, and it comes a little bit more risky now. New low by a tick there. Can somebody reprint the levels one more time for us? So new low by a tick, and then came flying back. $74 is a little bit more tenuous right now than it was a few minutes ago. Taking the data at face value, GDP numbers from China has confirmed what many analysts have been forecasting. The country will be the only major economy to have grown in 2020 despite dealing with the coronavirus pandemic. GDP growth expanded by 2.3% this past year versus a significant contraction expected in the United States and elsewhere. While outside experts have long expressed skepticism over the veracity of the reports, many are weighing in on the new data, given the rate of Chinese export boom and the tumultuous trade war between Washington and Beijing under the Trump administration. The fourth quarter numbers are remarkable. Chief China economist at JP Morgan said, if you look at the fourth quarter's 6.5, that's even higher than the pre-pandemic growth path. From that perspective, China's V-shaped recovery is complete. He still warned of a new COVID outbreak in some kind of province could hurt the recovery of consumption in the service sector, as China reported more than 100 new coronavirus cases for 6 consecutive days. That's 2 zeros only. 100, not. Let's not go there. All right. 100 in China. And they're worried about it for 6 consecutive days. Okay. Consumer spending has been weak in Chinese economy, but the latest figures showing a year-to-year growth in retail sales slowed from 5% in November to 4.6% in December. Retail sales for 2020 were also 3.9% lower than the year before, according to official data. Despite the latest dip in retail sales, we see plenty of upside consumption as households run down the excessive savings they accumulated last year. All right, China. Moving ahead. All right, we again got down to 70. I got a new low by a tick there, get a little bit bullish, and rotated back up here. Probably going to make a little bit new highs. Got resistance around the 84, 85 area. I guess we're a little bit of a trading range here. Again, we kind of wait for opportunities. We can't go create opportunities. Sometimes it's a little bit quicker. Sometimes we have 4 or 5 trades in an hour. Sometimes we have 4 or 5 trades in a half an hour. Sometimes we have 2 trades a day. We are at the mercy of price action and activity in the market. We kind of let the market dictate what we're going to do. It's instead of trying to guess what it's going to do. All right, so there's no economic reports coming out this morning. Yellen, the new Treasury Secretary is doing her confirmation hearings right now this morning, so she could be creating a little bit of volatility in the market. So that could be a reason why we're kind of flipping around here a little bit, as she might be, saying things that obviously affect the market in one way or the other. Patience is very important when we're trading. We have to wait, like I said, for the opportunities. We can't create trades, not what we're trying to do here. And right now, it's kind of got ourselves on a little bit of a range there. We have resistance at 84, 85, 85 area. Got up to 83 and change. It came off of it. That's the first. Keep talking and make money when you talk. Okay, I will try. Not that I'm going anywhere, but if you insist, I'll keep talking. Glad you're making money. Again, be a little bit careful on this rotation back to the 74. Um, because of the way it traded just before that. It's a little bit more riskier now. We're trying to take advantage of ebbs and flows in the market. We're trying to find those inflection points that'll give us those opportunities to scalp the market. Um, Support and resistance levels, rotation back to certain areas. And we put together a methodology to try to take advantage of those ebbs and flows, those opportunities when they present themselves. So that's what we're trying to do here. We're just scalping the market 2 to 3 point stops, given the volatility of any specific day that could change because of more volatility comes into the market based on what happened in March. The markets were going crazy, so we had our stops were expanded a little bit. So we have to take into consideration those opportunities as well, and that's how we're trying to do here. Or that's what we're trying to do. Basically, scalp the market for 2 to 3 points on our trades, and using price action opportunities. So at around anywhere, around in about a half an hour or so. If you want, there's going to be a Q&A section here with some of the new folks that are in. You can ask questions about the services we set up with Brad, and he'll be able to answer questions for you about brokers or software or whatever we have to offer here. Again, we're focused more on trading opportunities, right? That's what we're trying to do here. Looking for, and again, the people who are new to this, welcome. This is we're trading futures. If you have some experience on this already, then it's good for you, and we can try to expand your knowledge and try to give you different ideas and concepts to look at. And if you're new here, we definitely have a ability to show you some new ideas and concepts and teach them to you, and that'll help you try to be profitable here in a tough business. No doubt about that. But we try to make try to give some sanity to the numbers. That's what we try to do to the movement of the market. I try to explain them to you, try to show you, sometimes why they do what they do, if I can understand it myself. Sometimes it's easier to explain, sometimes it's not. If you've ever traded futures before, this is a very unpredictable area, but this is what we like to do every day, right? It's not a job where you can get in, work at behind a desk, and every day is a new day, and the opportunities are there. We have to just try to find them. Some are a little bit more obvious. Some opportunities are a little bit more obvious. Some are not. So we just try to help you out, try to find them for you, and to try to take advantage of them, try to make some money on an everyday basis. Again, we have resistance around the 84, 85 area. If we get up there, obviously we're stuck in a little bit of a range here. We would have liked to get the 74. It got down to 75 over there and then pop back up. If depending on how you scaled in, if some of you did get them, then you did all right. So the support resistance levels references only, not inflection points to consider trades. No, they are definitely the support and resistance levels that we give out initially are opportunities for trade. That's where we believe the markets are going to bounce off of. Then they get into an area, and then they become a little bit. Again, you have to know when those levels are still workable and when they're not. So no, they are definitely levels that I would use for to look for opportunities to trade. But sometimes the price action requires adjustments. That's all I'm trying to say. And when sometimes if you're new in here and you don't understand the lingo, what I'm saying, I know I try to be straightforward with everything I'm saying. Sometimes it's more of a, if you've taken our course, you understand what I'm trying to get to a little bit easier than if you haven't. But I'm not really trying to hide anything here. So, like I said, it's, because we got down to 75 instead of 74, it's a little bit of, it's not as strong as it was 10 minutes ago. No, I understand. I understand. I got no problem with the questions. I appreciate them. I'm just trying to tell you, if you didn't understand something, maybe that could be a reason why. Have you traded before? Or are you trading now? Oh, that's not good. Traded futures or even trading stocks? Yeah, well, stocks are more like hold and buy and hold or sell and hold, and futures you're in and out trying to find opportunities. So it's a different animal. Just wanted to make sure you were trading futures. That's what we're doing here. Again, you can see here we've come back down here and retested the 75. I would definitely say that the 74 area right now is definitely a lot more risky than it was initially. So if you're a little bit more risk averse, you probably don't want to take the level. And if you adjust a little bit lower, maybe you could do that. All right. Again, like I said, the 74 here becomes a little bit more risky now. The fact that we have tested 75 3 times, that's annoying, right? We come so close. So obviously, the 74 is something that I would probably, if you're more risk averse, not take. And then look at the 66 area as the next support level. Again, you have to make adjustments to the market and what it's trying to do. We got up to, we said the resistance would be back around 84, 85, only got back up to 82 and change. So we didn't have an opportunity on the upside to get short, unfortunately. So we're just kind of stuck here, mired in this little range, and we have to be patient and kind of wait for it to decide what it wants to do. Next support level would be down at 66. For those of you who are looking for support resistance levels, if you look at the chat box area, they're printed in there. Uh, no, it's not as clear cut. You mean in 5 minutes? Okay. All right, again, be a little bit careful there of the 74. I would not look at that as support anymore. Um, I would probably look, if you're looking for some support, down at 66. That's our next support level. Resistance still at the 84, 85 area. Obviously, we got ourselves in a little bit of a range here. So if you're going to take this little trade, range bound trade, just know your exit and entry areas. All right. Again, if okay, Chad. Yeah, Chad, how are you? Are we flagging? Give a break there. Um, yeah, I probably would say it is kind of flagging down in here. That's why you have to be careful of the 74, which is the next level down below. I mean, that it never touched, but definitely looks like if we get above 88, we could rally. Can somebody post the levels one more time for us? If you look at the chat box area, the levels will be hopefully be printed in there. If not, I will give them out verbally. Yeah, so Chad, so yes, it's kind of a little bit, it looks like it might rotate lower if we get below 73, but I'm not positive about that one. It's not like looks like it might, but like I said, not not strong. There's the levels again in the chat box area. So I got above 89 though. We got above 89. I think we rally to the highs and maybe um, up to our first level of resistance. Again, it's kind of found a little bit of a base there. We had 74. It stopped at 75 instead, so that's a little annoying. So keep that in mind if you're trading. So again, I would not take the 74 anymore. Look above 89, a little rally. Right now we're range bound here, a little still. So like I said, if there's resistance around 84, 85, if you're going to take that, at least you have your exit strategy above 89. Otherwise, just be patient and wait because right now it's kind of drifting back and forth in the middle of nowhere's land. This is what we like to call as no trade zone right in this area here. So I would just wait for it to tell us to do something before we do anything. No reason to uh, lose any money in this little area because as soon as you decide, oh, I'm going to get in, it'll decide to move, right? Usually the case. So If you didn't take advantage of the range game here over the last 15-20 minutes, it's probably not good to take advantage. Try not to take advantage of it now. It's a lot more riskier. Again, could you have taken advantage of the range trade? Absolutely, right? As long as you know where your exit strategy is, nothing wrong with that. But just I mean, everybody's a little bit different, and some people do like to trade their range game. Once it gets involved in that, because at least you know where your exit strategies are. It's a little bit more clear. All right. Again, Brad's going to come on now. If you have any questions, he's going to give you some idea of what we do, and we'll get back here in a bit.
Hey, I wanted to spend a couple minutes and welcome some of the new people that are stopping in and checking Sol out, checking this service out. This is price action trading with Sol. This is a opportunity that's on a daily basis. It's a service that he opened up in Zoom. Price action trading is a methodology that's been around for a long time. It's the action of price. And in this case, it's the action of price in and around Sol's proprietary scalping levels. So what I'm describing to you is what Sol does on a daily basis. And if you like what's going on here and you want to be like Sol, in other words, Sol's been trading for 25 years or so. He's a CME Group floor member. That's the trading pits in Chicago, which is a pretty big deal if you think about it, to be able to survive and excel, in my humble opinion, up against the best traders in the world on the trading floor, the trading pits in Chicago. First starting out and trading the 30-year bond and then moving into the indexes, and these particular indexes in the S&P 500 E-mini. So he took his learned experience in price action trading and developing a technique, and he is applying it to the S&P 500 E-mini in this case. So he is trading himself. He is actively scalping the market based on his price action trading methodology. And he opened up this service for a reason. One was he was asked by many people to teach them how to trade. He was asked by associates of his to teach their relatives to trade. And it became a thing. And then it became something interesting for him, which is a way for him to focus, stay current, and stay profitable based on interacting with other traders and providing a service where he could teach those traders his methodology and he can stay razor sharp based on his trading. So it's become a win-win for individuals that are new at trading that want to get set off on the right foot, and individuals that have been trading for a while and want to focus on making money. And in this case, making money in and around the areas, the scalping levels that Sol identifies on a daily basis for his own trading. So let's think about that for a second. Sol has created a roadmap for entry into a morning's trade. He sets that roadmap by laying out key levels before the cash open, just right around the cash open. So he gave out those levels today to everybody. Those levels are, and I can read them off to you. Let's have to make one change here. Of course, sometimes I can't find my mouse when I switch computers, but I found it. I'm going to read off the levels for those that have missed them. Hey, Mark, thank you very much. I've got 37.89 as the pivot. So that's the first level Sol gives out. Then he gives support at 82, 74, 66, 59, and 52. Resistance at 96, 3805, 13, 18, and 25. So think about that for a second. The first opportunity here, based on value and a trading advantage over other traders, is Sol's levels. That's the most important thing that could be a takeaway from this conversation. Okay, so let's think about that for a second. Sol is giving you an opportunity to have better levels you get from your software, better levels in most cases, right? Better levels because there's no in stone guarantee of anything based on how the markets behave on particular days. So he's giving you a roadmap that you can declutter your trading screen, declutter your opportunity so that you can focus on particular areas as the market ebbs and flows during the morning session and Sol's pivot comes into play, his price pivot, right? The 37.89 or the other levels based on his support and resistance as he lays it out. These are levels that are coveted by individuals that were part of his world on the floor and individuals that just wanted to get Sol's levels because they were that good. Now think about that for a second. Other professionals want Sol's levels. You could say, hey, listen, my software gives me these levels. I got levels from calculation. I learned how to put together market profile levels. I learned how to do this, or I have no idea about levels, but I've heard of pivots and support and resistance. Make no mistake, this is how Sol puts his levels together. And the viva la difference of these levels is that here's an opportunity for you to count on levels based on market conditions and be able to trade around these levels based on learning Sol's methodology, the entries, exits, and stops based on his price action trading methodology. So you come in here, first order of business, receive Sol's levels. Second order of business is what to do with those levels based on the entries, exits, and stops. That is what we do on a daily basis, and that's what the opportunity is. Sol's commentary in and around those levels, based on the market getting to those levels, is worth its weight in gold. You have to pay attention. You should ask questions. You should be here on a daily basis when you can attend. You should develop a relationship with Sol on a personal level. You should advance. Like the first thing you should do is you should sign up for Sol's monthly so that you're able to come and go as you please. You should get Sol's levels on a daily basis. You should pay attention to the market action, how the market's behaving after the cash open. How is the market behaving at Sol's levels? How are the levels doing today versus yesterday? And then you should practice trade. You should have a software setup. You should have the ability to have clean charts like Sol does, to the point charts, and then load them into your charts, Sol's levels, and then concentrate on the trade action in and around Sol's levels. And just rinse and repeat that on a daily basis until you become really familiar, and then decide if you want to take Sol's course or not, where he takes you under his wing and he instructs you on what to do with his levels and why, and then critiques you on the trades so that you can make those adjustments, tweak your trading, and get better at it. Identify where you could do better and then apply that and ask questions based on that. And then I can't emphasize this enough. If Saul's trading based on the levels that he's giving out, then who better to answer a question based on the activity of the do it right or could adjust at those areas? And if you could ask somebody that question based on that trade, based on that um, trading level or his proprietary scalping levels, the trade action around that level, and how to go short or go long, where to enter price, where to defend a price, and where to exit price. Saul generally has a 2 point minimum trading profit he's looking for, and he has a 2 point stop generally. He's looking to do 2, 3, 4, 5 trades on a good trading morning, and he's looking to bank his money in the first 2 hours. Might take longer on an average trading day. Some days he does no trades based on market action. Some days he does his 5 trades. Some days he does 1 or 2 trades and has banked his money for the day and he stops trading. Might be in and around his pivot or one of his other early levels. But that's the beauty of this. How do you learn how to do the same based on somebody that's really got his money where his mouth is? And he's giving you levels ahead of time so you can critique the levels. Are they any good? Is this guy all wet? So to answer a couple questions, we had questions about brokers. If anybody has that question, ask it again. Type it in. Okay. We can turn you on to a broker. You ask that broker questions about margin. That's the broker's job. Commissions, that's the broker's job. I would suggest, strong suggestion, work with a broker that's actually going to be there when you need them, when something goes wrong. Right? Try to get the best commission you can get, your best service fees you can get, but try to make it so that the person's there, or an individual's there that can pick up the phone, show you how to react, teach you the order entry so that you can get good at this, okay, based on these services. So, the prerequisite here to be part of this is Sol's monthly. It's 25 bucks a week. Usually it's 379 a month. I don't even know what that is a week. But right now it's $100 for the month, which is 25 bucks a week. If you didn't get $25 today, right, then you got a problem. I mean, just listening to this guy and understanding where he's coming from, you'd buy him $25 worth of drinks just to get a couple answers out of him. So I'll send that out to everybody now. It's coming out to everybody in chat. So if you haven't signed up, it's a requirement. Sign up. Spend the 25 bucks a week. You're in control. If you haven't done it, do it. You know who you are. We know who you are. We want you to be here. We want you to be comfortable. We want you to do whatever you can, right? When it comes to yourself and getting a trading advantage over other traders. So post your questions. Don't be afraid. Okay. Yeah, admin, that might be, that certainly could be true. Yeah, I mean, that's a good point. So we're talking about some of the action based on brokers in the UK. We do have a global audience here, which is something that we really appreciate, and thank you for coming in. The brokers that we recommend in the States are, we have recommend a couple of them. It's really a due diligence on your part, and also try them. If your broker's not helping you move, there's a lot of they're getting um, somehow flushed out a little bit based on some of the competition, but look for ones that are healthy. Look for ones that have great order execution where you can, bracket your trades and all sorts of stuff. And look for ones that are responsive and only put the money in that's required. Okay. So, Mahmoud, let me understand that. So Mahmoud, you know, I guess, do you have a trading platform with real-time data? And can you practice trade? That's my first question to you. And I guess, are you new to trading the S&P 500 E-mini? Adam, the monthly gives you access, based on the $25 a week to access Saul's room, get his levels, and ask some questions and in and around the levels, and Saul's commentary based on the morning's trade. We should have a private conversation about, and it's on an individual basis. So everything we do here is live in this service and also direct on the telephone or other communication means like Skype. So we would talk about Saul's course and his personalized intensive, his mentoring. And I think that's so it's a stepping stone. The first thing you do is you sign up, become part of the family. You're able to receive his levels, which are, as I said, worth their weight in gold. Um, and you can witness that yourself. You don't listen to me, okay? When you get the levels and you write them down and you plot them into your software, you're either going to see that Sal's levels are worth it or not. The feedback is that they're well worth it, but it's feedback from individuals like yourself. Saul doesn't really tout anything. He doesn't guarantee anything. He just puts it out there. If you like it, you like his temperament, you think he can teach you, if he's giving you information that makes sense, if you're able to focus with it and really, buckle down and start to understand what he's doing, then the next step would be from joining the family, which you've done, to becoming part of his intensive, which is another fee, obviously, but he's got some great deals on it. Just like we were talking about his normal monthly rate for his room, which people pay, individuals pay Sal for it, is $379. Right now, he's got it on for New Year's at 100, right? And you should take advantage of it, or you have taken advantage of it, and that's for everybody. And then he also has great opportunity based on his intensive, because he knows people are out there trying to really focus on trading, trying to replace income based on, COVID and the way things have been going over the last year or so. And as we look into 2021, it's your opportunity to decide if this is what you want to do. And Sal's the guy to teach you. And, there was a day not too long ago where people were coming to Chicago, pre-COVID, pre the crazy pandemic, and visiting him on the floor. I don't know if we're going to get back to that, but certainly people can come to Chicago and visit Saul and go out to dinner. And, that's, there's a progression here based on this relationship that is very personal and very opportunistic, right? The opportunity is if you're doing well and you start making money and you start to really understand the levels and the entries, exits, and stops and the price action and the ability to derive money from that, then that's a great relationship with somebody. Yeah, no, I think, but so which is great. So, Mahmoud, did you sign up for Sal's monthly? I mean, did you become part of the family? I guess that's an open question, right? I mean, Bill P. Jack, I think you did. Des C, John E, Kara, Rafi. It's not that big of a deal. I mean, God, $25 a week is like it's really, and I have to say, what is it? It's a commitment on your end. Trading's big money, right? $25 a week. We started this thought that would you answer questions from people that couldn't pay you $25 a week to really buckle down and focus on their trading career? And so far, it's been great. I mean, individuals have reacted to it in a very positive fashion. Could we get 379? Absolutely. Could we get more? Probably. But I think what we wanted to do, based on our conversations, was to open it up and have people show us that they're into it, and then get his levels, which are great. Focus on putting up the S&P 500 E-mini chart to look like Sol's, the 5-minute, the 1 hour, and the ZB. Plot them in your software, pay attention, and then decide if you want to stick around. You don't have to take Sol's course. People find it very worthwhile being in here on a daily basis. And, being part of Sol's world. Hey, Chad, you come and go as you please. No worries. And there is no, and I should put it to you this way, Chad, is that there is no, like, this is a very good point. If you're part of Sol's course in his mentoring work, and you go away for a month, okay, and you do your own thing, or you take a couple weeks off here and a couple weeks off there, that doesn't impact your time with Sol. It just extends out. Sol's mentoring lasts a year. So, he's flexible. And think about it. Trading is supposed to bring you freedom of your time, the ability to come to your screens for a couple hours a day. If you're good at it, and if this thing clicks with you, then you have developed a tool to make money and develop freedom. I mean, it's amazing. A couple hours a day, if you're good at it, bank your money and you're finished. Then you come back and you do it again tomorrow. And depending on what tomorrow brings, based on volatility, momentum, and follow through, maybe a great day to trade, maybe a day to sit on your hands. That's trading. But if you can learn to make $100 based on Sol's methodology, then you can learn to raise your contract size and bring your, and that's why people trade the S&P 500 E-mini, because you can go short, long, you can add contract size, you can reduce contract size based on your risk profile for that day and how the market is behaving. That's learned. That's learned based on a relationship in this service and based on your relationship with Sol. So the system here is price action trading, which has been around forever. It's how you manage, and I call price action trading the last bastion of hope for traders, because they've traded a whole bunch of crazy stuff, that have spent countless hours learning things just to have good conversation with other traders. And in some cases, it's the boo-hoo kind of stuff. The point here is, if you can see that Sol's levels work, if you can identify that Sol's levels work by receiving them on a daily basis and seeing how the market behaves in and around Sol's levels. That is belief level one. If you can understand how to apply price action trading in and around those levels, that's step two. If you can do that well, then you're going to have a profit against your commissions. You're looking for a minimum trading profit on each trade of 2 points. If you can just take that small step, then you can apply it. And there is no question that when you add additional contracts, there is a additional emotional response to the increased risk, and that is taught and that is learned. And as you develop your emotional abilities here to deal with the trade by repetition, order, right? Logic, and can concentrate on the small stuff and get it right, then you can raise your contract size to make money. Where you go with it, how much money you can make a day is really up to you. You know, what's your risk profile? Everybody's risk profile is different. People are satisfied with certain amounts of money. But the concept here is if you can come to your screens for a couple hours in the morning when we believe that the market has better momentum and follow through, where we believe the opportunity to chip off some points here based on the S&P 500 E-mini is easier than the afternoon or the overnight time and that type of thing. On a day in and day out basis, the market looks like, and you can look at your charts, that it's giving you 2 points. If you stretch it and try to get a little greedier, right, and get 3 points or try for 4 points, well, the market tends to reverse on you and hurt you, right? There are ways to try to get more out of it, right? And so I'll teach you that on how to cover some and let the others run based on current, particular market conditions. But that's what's done here every day. Hey, Maureen, whatever you have to do is fine. You're the best, and we appreciate you. And I hope everybody is safe. We went through a hell of a COVID situation based on getting COVID, and the quarantine stuff is important. But just make sure that you've got what you want. Yeah, no, I just be really careful. Take, and I'll just, I don't know, but they say take vitamin D. They taste. They say take zinc. Be very careful that you don't get a pneumonia. And if you do get one or you feel like you have one, get an X-ray because I got an X-ray. They said my lungs sounded fine. When they were hitting me with the what do they call that thing when they listen to your lungs? Oh, I can't remember. But anyway, he said, "Oh, out of precaution, let's give you an X-ray." And wouldn't you know it, I had pneumonia. So they gave me antibiotics and some other anti-pneumonia stuff, and it covered it. But I mean, just be careful. And then after COVID, make sure after a period of time that you get an X-ray and have them check your, everything else. My daughter's going in for that hopefully next week, and then I'm going in. I've been trying to get my strength back, so I pushed it out a little bit. I've got to go in for a full workup probably in early February. But yeah, I mean, COVID is a strange thing. It hits people differently, you know. But I've definitely got some of my energy back, as you can probably hear in my voice. Yeah, and try the vitamin D. Has been great. We get stuff from, I don't know if anybody knows Dr. Berg, who really isn't a doctor. He's a chiropractor, but he's got some good, not that expensive, um, like vitamin D and K2, I think it is. And he's got some good minerals and, some of his stuff is keto stuff. So we're trying to do some of that to take some additional weight off. But anyway, you do what you need to do. No worries. Just make sure you take care of you and yours. So I think I've gone through a lot for individuals. You know, take the time to sign up for Sol's Monthly at the $25 a week. You come at any time. You come and go as you please. That's the beauty of being part of the family. And thank you. So Mahmoud, did I answer your questions? I mean, are you okay? And I did sign up for you to join the I mean, I did send you something to join the family. And again, we try to make sure everybody is okay based on the relationship. But take the time to sign up for Sol's $25 a week. Hey, Kara, Johnny, Bill P. I think, Bill, did you sign up for Sol's? And Adam, if you want to talk about Sol's coursework, let me know. I know we sort of went back briefly, and admin the same. You keep asking that question like that's like a real question. I guess if I've spent all this time jawboning and you were asking me that question again, let me ask it back to you. Do you think if you learn price action trading based on how it's offered here, could you make $20,000 a month?
All right, so the market here got up to the 84, 85 area, like we said, and it did rotate back off of it. So we had a little resistance up there in that level, and we did come off of it. That's where we had the resistance. Again, waiting and being patient, waiting for the opportunities to present themselves is very important. You could make or lose as much money as you want. To be honest with you, there is no limitation as to what you can or cannot make in any kind of business. This business, especially, as you trade the right size. So, it's an objective. It's very subjective. It also depends on your risk tolerance and what risk you're able or willing to take. I think if you it doesn't really matter what amount of money or how many contracts you're trading. It all depends if you understand what we're trying to do and teach. And if you can understand that, then you could trade as many contracts as you want to do whatever goals that you have in any given day. I mean, there's definitely opportunity here. for anybody to make whatever amount of money you're willing to or goals that you have, and it's just a matter of you understanding what we're trying to do. And if you understand what we're trying to do and accept the risk, then yeah, you can absolutely make that amount is not an unbelievable amount to strive for. So it's basically it doesn't really matter what amount of money that somebody's you are trying to make or somebody else is trying to make. Whatever your goals are, it's attainable. It's just a matter of being able to trade the right size and being able to manage it. Are the markets moving fast enough and have enough liquidity for you to be able to make that amount of money in the course of a day? Yes. There's not an issue there. It's just a matter of, are you willing to take the risk, and are you willing to understand what we're trying to do, and then how you're going to be able to manage your trades once you get into them. And that's really the answer to that question. If you want to, whatever amount of money that you want to make is really not the question. The question is that you understand what we're trying to do, and if you understand what we're trying to do, then to implement them to whatever size you want to trade to be able to make the amount of money or the goals that you're trying to set for yourself. Anyway, but we came up here to the 84, 85 area. We said anything above 89, you want to be out of any shorts, but it stopped right around 86 and then came off of it. So we didn't really take that much heat or risk, and a nice rotation off of that resistance area. Again, we waited a little bit of time there. We talked about first part of the early morning where it wasn't doing much. And kind of we had to wait a little bit, wait for the trade to kind of develop. We found a resistance area based on price action, and then we gave you your exit strategy based on price action, and you were able to take advantage of that trade if you wanted to. Again, these are opportunities that are out there. It's a matter of understanding how to find them and how to trade them once they present themselves. There was I understand that, Steve, but you know, the one of the traders in the bond pit when I used to trade, his break even for the day was $100 grand. Okay, that's that was his break even for the day. What percentage? Again, that's a very that's dependent on your risk tolerance. There's more opportunities there. If you're looking for more opportunities, there's plenty more opportunities. It doesn't mean that you have to take every trade. I can sit there, and if I just use the levels that we have, that's one thing. There's different opportunities along the way also that present themselves, like this 85. I said get short here at 85, 84 area that wasn't there beforehand. So it's not a matter of just the levels and what percentages. It's a matter of how you read the price action and how you determine what your next trades are going to be. Some people might have not have taken it. Some people might have taken it. So when somebody asks me about percentages, I have a very tough time to answer that question because there's many opportunities. Some of our traders took the first rotation to our green band earlier. Some didn't. Doesn't mean that is that percentage good or bad. I don't know. I don't call out all our trades that we have that I teach. It's a matter of you finding the trades that you're comfortable with taking. If you want to trade more, then you could, and you can obviously have figure out what percentages they are for you. I don't keep track of that. That's not what I do here because everybody's got different risk tolerances, different ways to trade, what they're looking for. And so I try not to put a quantitative number on it like that because it just not right. Doesn't mean that everybody's going to take the same amount of trades that are out there. So you have to understand the concepts that we're teaching and then apply those concepts to the the trades that you want to look for, the ones that you can recognize, visualize, the ones that seem to work for you once you understand how the market works and what we're trying to teach. And once you figure that out, then you can look for those trades and take them. Some people can trade 10, 15 trades in the course of a day. Some people can trade 2 or 3. It all depends on what your risk tolerances are. So it's a very tough question for me to answer because everybody's different. I've been around here too long to know that there's just one exact right way to doing this, because there isn't. There's multiple ways of trading with what we teach. And so it's a matter of how much you want to trade and how much you want to get involved in the market per day to be able to determine that number. So everybody's different is what I'm trying to say. We're coming back down here again. I'd be a little bit tenuous of the 74 area, like I said, because of how it traded before. If you did get short there against the 84, 85 area and you still have any contracts left, you're trying to get it through 74 and looking for the 66 down below. Okay, unfortunately, let's see if we're going to jump back into this little trading range or if we're actually going to try to extend here a little bit. We don't know, right? So if you are going to buy at the bottom end of the range here, anything below 73, you want to be out of any longs. Again, kind of said that the market kind of a little bit tenuous there against 74 area. Looking forward to 66 on the downside as the next support level, only because of the way the price action dictated that it wasn't going to be support anymore. And hopefully we did not take that 74 area and this time around. Unfortunately, we missed it by just that much. Yeah, that was a good trade. Like I said, I was um, we had. I think you just came in right before I said we would have some resistance around 84, 85 there, and it did turn over very nicely. All right, we did not have any follow through there, which uh, not too surprised, only because there was a secondary level of support underneath the 74 that held. Now, if we get below 70, I think we'll have a run down to the 66 area. We should have, well, first of all, you should have been looking for shorts above there at the 84, 85, because we said that there was some resistance earlier when we were not doing anything, trading in that range from 75 to 80. So we had resistance up there at 84, 85. So that was the first short that I mentioned that we had some resistance on. That was a price action opportunity that occurred once we painted some bars, and there was a reason for it. First of all, so if you got short there, that was the first. The other opportunity there to get short, if you didn't get short there, was below 80, um, and that pushed us all the way down to the 75. So that was another reason, another area there to maybe if you missed the 84, 85. And then now, because of the way it reacted around the 74, I think if we get below 72 or 70, I said, well, we might have a run down to that 66 area. So we had the areas to get short earlier that I mentioned. Those were the areas. So right now, we need to get below 70 for us to open up the door to get down to 66. So now those are on the downside. We already had the upside resistance that played out. Now I would say above 89, we'll have a run up to maybe well, at least up to that high, the earlier morning high of 92, and then possibly even the 96. We're basically back in this range that we were at earlier where we were not trading, and so consequently we seem to have gotten back into this range here again where we're not trading, or we shouldn't be trading anyway. Right, I can see that. Yeah, so this is where we're at right now. So unfortunately, if you do I trade the Nasdaq? No, I don't. I kind of try to stay focused on one market. Doesn't mean that you can take the same concepts that we teach here and use them in the other markets, any other markets as well. Since most of the ideas and concepts that are taught here are technical, you can take some of the technical analysis that we teach, but we feel that it's hard to trade multiple contracts as you might miss something or have too many things going on at one time. We try to focus more on ES. Keeps us saner, keeps us more focused. We understand, there's obviously different criteria that are invoked with the Nasdaq versus what makes prices move in the ES. And sometimes they correlate with one another. Sometimes they don't. So instead of trying to, I just like to focus in on one market. It's a lot easier for and less distractions. And I'd rather become good at one market than half good at or third good at other markets. I don't know if that makes sense, but that's my theory. But if you like to trade other markets and keeps you, that's what you want, you can take some of the concepts and ideas that we have and try to implement them in other markets as well. All right. Well, we've unfortunately got ourselves in this little range, a little resistance right up there around the 78, 79 area. If you're a little aggressive, anything above, again, a little different adjustment here. If you are a little aggressive around this area, anything above 82 out of any shorts. I think the better trade would be above the 89 to push forward on the downside below 70. And this is kind of, a little riskier trade anywhere in here. But again, market kind of sets things up for you. You got to look for them. And depending on how much aggressiveness you are willing to take or how much risk tolerance you are willing to participate in, then you can make those decisions individually on your own and decide if you want to, trade those amount or not, that amount or not. We do there, Steve. Yes, Steve, we do. It's the open range is important. Uh, Definitely would keep you on the right side of the market would be best way that I can quantify it quickly. Uh, I got 5 minute charts up there. That's what I'm looking at. Very simple. Nothing too crazy. Simple concepts work the best. Hi, Maureen. You too. Take